Hey guys, so looking at Cadjpy, I just want to go over our review for January and until now and kind of talking about entries and exit points. So looking at Cadjpy, I mentioned to sell around 84.5. So when we're coming up to a sell zone, what we want to do is we want to make sure our price is rounded. So as you can see in the market, there it goes 0, 0, 100, 200, 3, 4, 5, 6, 7, 8, 9, and then we're back to 0, 0. Okay, so that's how price is. So what we want to do is grab, out of those numbers, we want to grab 0, 0, 200, 500, 800, and then again, we're back to 0, 0. So this is where the market makers usually execute price off of, and if you go on the daily time frame and look at your resistance and support levels, you can tell that price is rejecting off these levels. So sometimes price will dip past the 200, 500, or 800, so it's called slippage. So what ends up happening is, for example, let's say we're in a sell. So we're in a downtrend, come up for a retrace, and then continuation down. So in this case, let's say it is between 200 and 500. So let's just write that down quick. Okay, so let's say 83.5 and 83.2. So this would be our entry zone. And then what we would look for on lower time frames, so the 4 hour, 1 hour, 30 minute, we would look for exhaustion. Another thing we would do is add extra confluence or our fib retracement. So we would take it from the high to the low and see what level of fib that it's rejecting off of. So in this case, 61.8. So that's extra confluence. So we always want to have like a certain zone because sometimes price does slip past a certain number. So let's say you have a pending order at 83,200, it might wick right past and then begin to drop. So you want to make sure you draw out your zone and then look for rejections to execute at. So in this example for Cadjpy, we can see that, here, let's go on the higher time frames. So let me just go through this too as well, because some of you get confused. So some of you are like, okay, well, I get confused of looking at the higher time frames and then dropping down to the lower time frames. So basically what it is we have weekly and we have daily. And then we have 4 hour and we have 1 hour. So 4 hour / 1 hour time frame. Okay, so when we start from a fresh chart, we always want to look at the higher time frames because it shows the bigger picture and where the trend exactly is going. And then for the 4 hour and 1 hour, we're just breaking it down and we're taking advantage of getting a proper entry. So your main goal in Forex is to just figure out where to enter the market and where to take profit. That's it. So what we want to do is, this is what the weekly is going to look like, okay? So downtrend, uptrend, and downtrend. Continuation. Okay, so our goal is our entry, which would be right here. And then our target, which would be right here at one of our fib levels, one of our support levels, whatever it is. Okay, so that's the weekly and daily. Now the 4 hour is the exact same thing, except it's just broken up. So it kind of looks like this. Okay, that's the only difference. So what is our goal? So we identified on the weekly and daily that we're in a downtrend. We had a correction. We entered on that correction, and now we're looking to take profit and looking for a target. So in this situation as well, we have the target at the bottom, and then we have our entry at the top. So it's no different than the weekly and daily. The only difference would be that we can take, multiple positions since it's broken up. So we have our entry here, come down, we wait for a pullback, market rejects, we get another entry. Market pulls down, we get a correction, we get another entry. Same thing, we get another entry. Same thing, we get another entry. Okay? So it's the exact same thing, except it's broken up on lower time frames, but this move is this exact move. So we're just taking multiple positions and using it as our advantage. So make sure you never trade against the trend. Always look for the trend and use the daily and weekly as your roadmap, and then break it down on the 4 and 1 hour. That's all you're doing. And then obviously we're adding our trend line for confirmation. Let's just pretend these connect, okay? So we're adding our trend line, and then we're also adding our fib retracements on each thing. That's all it is. So market structure is huge, and then adding extra confluences, once you have that, you're literally golden. So let's go through Cadjpy quickly. So we can see that we are obviously in a clear uptrend. If we zoom out a bit, we can see that we have a resistance zone right here, which price actually touched. And we have a little resistance zone right here, but we ended up pulling past. So this is a major one. Price wicked up, sellers came in, pushed price down, and then a continuation down. But since August, we've been in an uptrend, but we finally reached our resistance level. So if you look on the 4 hour, we can see that we have been in an uptrend, and now price is looking to exhaust at that resistance level. So what we want to do is draw a box. So like I said, if you zoom out and go to the daily, we can see that price rejected around this area. And then if you go on the weekly, we can see that there is a level of resistance right here. Okay? So marking that up, we can see that price failed here, but then came up to this level. So it was around 84,450. So we want to take a horizontal ray and then place it there, and then edit the coordinates and go 84,450. Okay. Okay, so then price reached past 84,550, went up to about 84,564, and then it's kind of making like a head and shoulders pattern, and that's what we were looking for. So I actually mentioned earlier on in January that we would want to take an entry around 84.5. So it actually went past like 6 to 7 pips and then dropped. So what we want to do is take our numbers from the 0, 2, 5, and 8. So closest to 84,450 would be the 5, and then the closest above that would be the 8. So what we want to do is take our short position tool, and we want to enter price. I'm just going to edit the color quick. Okay, so our entry would be 84,500. And then our stop loss is always 30 to 40 pips above. Okay, and then our target is basically how I do the targets is just watching the support levels, the support zones. So for example, if you look on the daily, we can see that price really rejected around here. So that would be our first support. So what we would do is drag it down, and it's right around 82.8. So that's one of our numbers. So that's what we would target. So that's a 1 to 5 ratio. We're risking 30 pips to make 169. So let's just see how it plays out. Okay, so price is creating head and shoulders pattern. Came up and rejected. Came up again and rejected. Okay. So let's take a look and see what that looks like on the daily. Okay, so we were in a huge uptrend, expected a huge impulse down, and that's exactly what we got. Okay, so let's see where it goes. Okay, so price came up and tested 83.5 and then respected it and then came down. We had a gap over the weekend, so it actually passed 82.8 right here. So then let's see what happens next. So price always fills gaps at some point. Sometimes they don't do it right at the beginning of the week, depending on the pair, but for most cases they do fill. Okay, so price is having trouble breaking below, comes up and fills that gap, tests, and continues down. Okay, so looking on the daily, we can see that price passed this support zone. So again, looking at the daily and then dropping down the 4 hour, we could have took another entry here because it respected this zone, right? So we could take 2 entries on this and then just let them ride to the next support. So our next support zone is around 81.6 and 81.5. Okay, so let's just see what happens. Okay, so it touches that exact thing and then starts to exhaust. Okay, 3 candlesticks showing and wicks showing that it exhausted, and then price starts moving up because if you look on a daily, this is major resistance. Price failed to move 1, 2, 3 times. So then we want to exit our positions because we can see that the market is ready to reverse. We had an uptrend, then we had that downtrend push, caught support, and now we're looking for a retrace. Okay, so now what we can do is we can counter trend and we can take a buy position. So our sells are out. First support, it retested the first support, broke through, and then if we took another entry on this, we could take it to our next support. So you're just adding multiple positions as it's trending on the 4 hour. That's all you're doing. If you want to just add one position, that's totally fine with you. Fine. It all depends on the person. So we have support right here. Let's take out our long position. Okay, so our entry price is 81.6. And then our target is this next, so we broke the support, so our target would be up to here. And then we edit the stop, 30 pips. Okay, so that's a 1 to 4. We're risking 30 pips to make 120. So that's our first target. It may come up to this area as well, so let's see. Okay, so it hit our target. So we can take profit right there, or we can let it ride. So let's just see how it reacts. So just because it hits resistance, you don't want to freak out and be like, okay, it's going to come back down, it's going to come back down. We want to just watch price action, right? So if it comes down but then fails to go lower, right, you just want to stay in the trade. So that's the biggest struggle for a lot of traders, is that they can't hold their trades. And I mean, there's certain people that have different trading plans. So for me, on a certain pair, I want to catch 100 pips minimum. 100 to 300 pips on one trade. That's how I want to do it. But then there's some people that they want to catch 100 pips a week, let's say, and they want to do that by trading 2 pairs, and they want to catch 50 pips on Cadjpy and 50 pips on USD CAD. So in this case, 50 pips from here would be right here, and they would get out, right? And then they would look at another pair, they got their 50 pips, they got their 100 pips per week, they're done. So it all depends on your trading plan. Okay, so for this example, it touched resistance. Sellers tried to push price back down, but buyers came in, tested resistance again, went up to fill this. So that's around 83. So then that's when you connect this trend line to that, and then into the future. Test it again, went up. So this formation is obviously a double top. So I mentioned taking a short trade, a short intraday trade on that. And then price could not break below this. So as you can see, price went up. Sellers tried to push it down, doji, bullish candle. So this could be our next buy entry. Okay, so then price, price looked like it was making a triple top, but since it tested twice and wanted to try again, and the yen is weak because of all the stuff happening with the coronavirus. CAD was strong as well because oil was strong, so it blew through and it went past 83. Okay, so that's a strong bullish candle. So there's no need to get out of your buy, obviously, because we can see that it's going past. So then we had a huge impulse up. And where was our target? Obviously, our next resistance level. Okay? So it's really, really simple once you follow a pair. So you're just literally studying its every move, and it's moving in waves, and it's doing the same thing over and over again. So if you're struggling understanding like where to enter, where to exit, it's because you're focusing on way too many pairs. So you want to focus on max 3, plot out all your resistance zones and all your support zones, and then round your numbers, and when it starts to exhaust, take your entry. So, and then also you're using trend lines, you're using fibs, you're following market structure. It just takes time. Once you practice this over and over again, so easy to catch these trades. So now we're at resistance. We can see that resistance failed here, and then looking on the daily time frame, we can see that resistance also failed here. So we're expecting a move down. So what do? We get out of our buy position. So if you stayed in your buy position from here and then waited to our next resistance, that's a 300 pip move So that would be considered a swing trade, okay? So that is a really, really good move. But now since we are at resistance, we want to get out of our buy positions and then look for sells. So we want to short around, so our zone here, it hit 84.7, and then it is between 84.7 and 84.5, so we want to take an entry at 84.6. And then our stop loss is 30 pips. And then our target is support, right? Because it broke through 83, so it's going to come back down and test 83 again. Okay, and then this is current price action right here. So to be honest, I held this trade. I took sells a little bit before this. I took a sell at 84. 84.4 and 84.6, and then price dropped, but I got out on Sunday because I realistically thought that it was going to fill this gap. Like, I thought it was going to fill it more up to there, and then I would take an entry again and then sell, but unfortunately it just dropped. So now it's retracing again, and then what we're going to do is see if we can get a full move down, or if we can continue up. So again, you're just looking at it, you're following the trend, you're following price action, and you're just executing off resistance and support zones. And then when you want to add other positions, when you want to add more entry positions, you want to look at fibs, you want to look at trend lines, all that kind of stuff. So if you guys have any questions, of course, just let me know. I talk to a lot of people per day, so make sure I care about you all, and I want to make sure your progress is really good, but I can't remember to message everyone, especially if you're not replying to my messages in the first place. So if you're having trouble or you're not understanding or anything, just make sure you message me on Slack, and I will for sure get back to you. But again, don't rush the process. You guys got this. Like, I know it's frustrating, especially when you first start. It took me 2.5 years. Like, it's timing. You're developing your mindset. That's the biggest thing. Like, you're understanding the skill set, but then you're scared to enter the trade because you think that, oh, it might go further, or whatever the case is. And it's like, you just gotta risk. As long as you have risk management, you're good to go. So trust in yourself.